Good weekend, all. Ira Epstein with your financial market wrap-up. This is your weekend edition, and it is for May 6th, 2022. Now, before I get too far, all your mothers out there, happy Mother's Day. All right, interesting times that we had in the market. What a violent week. You had, since 2020, two of the biggest days up, one down, and they came back to back, and that's it. I'm going to repeat myself over and over. Bear markets do that. Remember when we had the bull markets for the 15-year period, basically, but let's think of the last decade. You go up, then you get these flash crashes, they called them. They last a day or two, and then the market would just resume its way. It's like it never happened. Well, in a bear market, it's sort of the same thing. You get these big rallies, and then they just don't last in a bear market. That's why it's a bear market, and then the market comes back down. It's like a relief to the marketplace. Well, that's what you've gone through. Now, we're at some interesting spots, though, on the charts. You're near Bollinger Bands, and we should pay attention. So let's go to the charts and see what we've got for the month so far. And we're only halfway through the month. Not even that. Let me take that back. We're the first week. I don't know where my brain is. We're down 0.19%. That's not so bad. You know, it feels a lot worse. It feels like I'm halfway in the month and a bigger break. But that's not so bad. When we take a look at the weekly area chart of closes, that's where you're at also. You can see how they came down, and that makes sense that they're the identical numbers. Then we go to these charts, and you can see that you had these swings, and all of a sudden the markets go every which way. Now, this is a weekly chart, so you're not going to see the daily swings that you had, that monstrous up and then the decline. It's all built into the week. But what do you have? You have a clear downtrend. You have a pattern of lower highs and lower lows. That's bearish. The market is under the 18-week moving average of closes. That is your point in the chart where when markets are above it, you say it's got a bullish bias, under it a bearish bias. You have a bearish bias, a major moving average where it might find supports, the 100-week. That ties in with the Bollinger Band as well. So we've got a bit of support there from those two, and the slow stochastic's putting down. What are the odds of staying under a Bollinger Band? Just 5% of the time. What happens often when you run into a major moving average with it? You find support. And in addition, you have momentum pointing down that's not embedded. So I can make an argument that if the market wants to find support, it is at the 40.96 to the 40.36 zone, the combination of those two numbers. Is there anything bullish on the chart? Other than it just pointing down and can get a bounce, no. I'd say the pros are waiting, and they'll hit the market anything near that 43.97 level. You'd have to get back over 45.09 for them to say, hey, something else is going on. And from there, the question is, how deep can they try to push that market? When you come to the Dow, it's identical. The market has come down to the combination here, unlike the S&P, which had the clear pattern of lower highs, lower lows. This had a higher high and then the break low. But again, you're into that support zone. You're pushing down in momentum. I'd be watching to see what it can do here. In the NASDAQ, similar to what we just saw in the Dow, the higher high and then the lower low pattern. Here, the 100-day average, the 100-week average in green. The market hung there for just 1 week. Then it decided to let go of that. So it's the Bollinger Band that's offering some of the support. Because you got under that 100-week on rallies, this is your resistance spot now. I'd look for the 13,526 to be the area that the pros start hitting the market on rallies in. In the Russell, similar to the S&P, you've had the downtrend, lower highs, lower lows, momentum down. Not one of these markets in the stock indices has yet tried to embed. Embed means that you get the red and the blue numbers together going and staying under 20 for several weeks in a row, and that locks in a very bearish position in terms of momentum. You don't have that. If this market decides to fall down from here, the next spot for it is the 200-week moving average of closes. In the bonds, still bearish as can be. The weekly chart really shows what's going on. I know that we had the Fed meetings and the Bank of England and everything. It seems like so long ago to me. But you're just running that. This is that gorilla glue trade. What do I mean by that? It's when a market latches on to the Bollinger Band, you get to some extremes. You get 3-4 weeks under it, and then you pop, and then you come back down. It can work down until it's just tired. And this market isn't tired. You have an embedded reading and you're here. I say on rallies, as long as you don't take out this week's low of 136, give a rally. I think you're going to have the pros selling it with both hands. In the 10-year note, it's the same identical posture. You've got the gorilla glue trade. You backed away for 2 weeks. I think you're going to try to hit that number again. As long as you don't take out this week's low, and we can look at that at 117.18 and a half. As long as you don't take that out, any rallies you get, I think, are going to meet with aggressive selling in the market, looking again for the market to get to the lower Bollinger Band. In the dollar index, this is unusual. The yen and the dollar are at extremes. The dollar's got 7 weeks in a row over the band. The most I've ever seen is 9 in a row. The yen has 7 in a row under the band. So these markets are at two extremes. I teach traders never to buy over an upper Bollinger Band. So if you're wondering on my subscriptions, paid subscribers, why I haven't said to buy the dollar, I'm giving you the reason. That is the reason I wouldn't do it, okay? I wouldn't buy over that. Euro's just riding the band. This is still a very bearish scenario that can go lower, and it's on the verge of embedding. How many weeks do we have? 1 week, both numbers under 20. 2 weeks. What about the week before? Didn't do it. So this is the week that you want to see if it embeds. Get your ammunition ready. Could be another series of interesting plays here. The Canadian dollar has basically gone from the upper Bollinger Band to the lower band. And when you get this sideways action, and I have been pointing this out to you for several weeks now, actually longer than that, it's a hard market to trade. You don't get enough upside or downside for somebody like me to want to get themselves that involved. I'll call the shots, but I don't see anything there. And here's that other extreme. Now, at the end of the day today, the yen was able to sneak out and get itself over that band. So we had a grand total of 1, 2, 3, 4, 5, 6, 7, I believe in a row, that were underneath the band, and now you've moved to the right-hand side. All that is relief. It's not a change of trend. You're embedded. You want to sell. I think you want to sell any good rallies you get in this market, as long as you first don't take out this week's low, which was 76.50. On rallies, I think you hit the market again. You get out of these markets if they're embedded when you lose the embedded reading. Bitcoin, have you watched how Bitcoin is tracking the NASDAQ? I mean, it's just insane. It's boom, boom. If you lay a chart one on the other, they look so similar. Well, you're down to the lower Bollinger Band and the 100-week average in a condition that is not embedded. I heard what I had to today. Traders are talking 32,000. For my money, if you were next to me, I'd hit you with the elbow and say it's a good time to be covering shorts, and short has been the way to be in this. Then we look at the differential between Brent and WTI, and it just keeps crashing in, as you can see here on the chart. Now, the energies are in bull market configurations. Higher lows. They've had a pause in lower highs, and I know you don't see that on the daily charts, but that is what's happened. If the market crosses 114.82, it could be all systems go again, and you could be talking the 124 area before you know what's going on. You don't have that picture in WTI. The picture here is more bullish. It's higher lows, higher highs. Momentum has corrected, past tense. And when the red line, if it starts crossing the blue, it's picking up again. You could be targeting the 119.38 level. Obviously, if you break through this most recent low here of 95.28, I'd want to rethink this whole thing. But until that happens, I say that the pros are going to be buying the pullbacks in the market, still looking for that 120 area. Rebob gasoline still up and away. Look at this. Higher lows, higher highs. Diesel fuel running away, same thing. Now, I cover all this and a lot more for you in my morning subscriber videos. I had one of you write me, "Hey, Ira, yesterday you put out the swing lines. Day before you had a problem in one thing." Folks, the free videos like these, I do my best, but they're free. I'm not going to beat myself crazy for them. I beat myself crazy for my paid subscribers. I took a trip across the country. I put out the morning videos every day. I do my best on the writings as well. I was in Mexico, same thing. I work for you. But for the free stuff, I'm not working for you. I do this. I want to attract you to be a paid subscriber, and that's where it works. Now, what do I do with all these? Let me tell you the workings as to how this actually works out. I wake up 3:34 in the morning. I read like a madman. And I'm trying to get my handle on first what's happening in Asia, Europe, but I'm also listening to Tom, not to Tom Keene at that hour. He's not on yet, but I'm watching just before them all the shows. And I'm flipping back and forth between CNBC, Bloomberg, Fox. I'm looking to see what is going on in the world because they all have a different take. Example, CNBC, as you know, is really the individual stocks. It's more the indices type plays that comes in Bloomberg, and from my perspective, it's the social plays that come out in Fox. That's the way that I look at them and how I approach them. I cover 40 charts for you in the morning. First, I start recording at about 5:30 in the morning, the futures. Why so early? They're open 24 hours a day, 23 hours a day most of days of the week. Then they close, as you know, Friday at 4 and they reopen Sunday at 5. So they're continuous. That's where I want to be going. I want to cover that for you. So it's going to be looking at a mixture of daily charts, weekly, the news. Then I'm going to start looking for you at 9 o'clock in the morning. I start recording my Spider ETF and stock video. Yes, I cover individual stocks in that, and I rotate them. Why 9 o'clock? I want the morning reports to come out for you. They finish up typically by 9 a.m. Central Time. I want the first half hour of algorithm money to get into the market, and then it's all systems go. I'm going to cover about 40 charts, and it is specific. Buy here, sell there. This is what I want you to do. And I know some of you in stocks, you don't like to go short. I get it. But that doesn't mean I can't tell you that I see a downtrend and that I think that those that do sell, they'll be selling looking for so-and-so. How do you get this all? It's so simple, and it's inexpensive. Take your cursor right now, move it up here. You'll see the icon, away you go. You can also go to www.iraepstein.com. Everything you need is covered there. I'm Ira Epstein. You have a good day, and I'll catch you all come Monday. Happy Mother's Day again.